let's talk to our guest, Kola Komalafe, fixed income dealer at Access Bank, to give us more details about the fixed income market as we speak. Thank you for joining us, Kola.
Thank you, Elliot. How are you doing today? Yes, so you asked about updates on the fixed income market, and earlier you had mentioned that there was an OMO auction on earlier this week, and that's right. So there was so the CBN had an offer about 500 billion naira across the standard maturities, as the 99 days, the 185 days, and the 365 days. So they had offered 75 billion naira on the 99 days, 75 billion naira also on the 185 days, and 375 billion naira on the 365 days. However, it was interesting to see that there wasn't much interest, as judging by the subscription rate, where you saw a subscription of just about 57.33%. And by the time the auction results were out, we saw that the stop rates on the 99-day closed at 18.99%. For the 185 days, it closed at 19.45%, and also for the 365 days, it closed at 21.5%. So that has also kept rates quite high. We expect that, or we should expect to see that there might be some inflows from FPIs, which would help stem the trend of depreciation, as I mentioned, across all those markets, the NAFEM, the NAFEX, and the BDC market. Even though the BDC market is the CBN that predominantly sells to them, but the NAFEM and the NAFEX, if the stop rates are anything to go by, you might see more FPIs come in. Once they come in to execute carry trade transactions, we expect that the FX market would appreciate both the NAFEM and the NAFEX. We might also see intervention by the CBN. If you recall, they intervened sometime last week, and we've seen a trend where immediately or just after intervention by the CBN, at least 1, 2, or some few days, you see that markets would rally, and then there'll be an appreciation. So we'd also watch to see what would happen. Also talking about the fixed income market, there's an auction, that's an NTB auction where there's about 178 billion naira that is on offer, and we just watch to see where stock rates would close there. But we expect that it will, of course, remain at these elevated levels. That seems to be the playbook or the plan from both the federal government through the DMO and also the central bank. So
okay.
Yeah.
All right, okay, Kola, sorry I cut you a little bit there, but I wanted to ask, now there's always an inverse movement in between the equities market and the fixed income market. Now, according to some of our survey here, we see that PFA's exposure to treasury bills had jumped about 42.5%, and then fund managers had grown their stake from 214.58 billion in December last year to about 221.87 billion in January this year. Now, so far as the fixed income market is concerned, how is this preference for fixed income instruments moving against the equities market, which I know you do not track? But can you tell us about the sentiment in it?
Okay, so because rates have remained elevated, you see investors divest from equities, which is generally believed to be more risky assets, right? So they divest from equities and they move to fixed income, particularly when the returns are high. And you know, with fixed income markets, you have your capital preservation, which you don't have promise of that in equity. So if you have elevated returns, it is just kind of normal that this kind of times you see investors liquidate their holdings in equities market and move it to fixed income. Another thing that might be playing in the equities market is profit taking, where investors that had entered when rates were still quite low, and you know that the stock market did fantastic coming from last year. I know recently it's been the reverse has been the case, but that could also be a result of profit taking by early investors, where they just want to, I'm fine taking profit at this level, they just want to exit. So you've seen some sell-offs, and those sell-offs, those funds are finding their way to the fixed income space. Yeah.